Welcome back to the Daily Crypto Roundup, and happy Thanksgiving to every single one of our listeners over in the United States. I know a lot of you will be traveling, cooking, or just taking a rare breather today. And if we're part of the background while you do that, then thank you. It genuinely means a lot. Today might be a holiday, but the crypto market doesn't take days off. So we're here as always to bring you the latest moves and the stories shaping the next few days of trading. Before we dive in, a quick update on the Christmas giveaway because, honestly, the response has been unbelievable. We smashed the 200 rating milestone in under a week. We didn't expect anything like that, and the fact that so many of you took the time to rate the show really does mean something to us. As promised, RR84 and Budman each won 50 XRP, and those payouts have already been sent. But because of the momentum and the amount of comments we've had, we've decided we're going much bigger for Christmas. Every time we hit a new milestone, 300 ratings, 400 ratings, and the stretch target of 500, we're giving away another 50 XRP to a new listener who comments. And starting from tomorrow, we'll be giving away 10 XRP every Friday for the best comment of the week and 5 XRP for a random comment as well. The more times you comment, the more chances you have. If you've rated the show and haven't said done yet, just drop that in the comments so we can add you properly to the list. We appreciate that many of you listen while driving or working, but even a quick emoji counts as an entry. Thank you again for pushing us further than we thought we'd go this early into the journey. Right then, let's get into the coin prices today, because things have stabilized a little after what has been a choppy few sessions. Bitcoin is holding at around 91,472, which is a solid reclaim after dipping earlier in the week. Not a moonshot, not a sell-off, just calm, steady action, which honestly isn't the worst thing right now given the low liquidity environment over the Thanksgiving period. Ethereum is back above the psychological 3,000 mark, sitting at roughly 3,038. And that level is important because it acts as a confidence anchor for the entire altcoin market. XRP is around $2.23. Solana is holding at $142. Cardano remains quiet at around 43 cents. Tron is steady at 28 cents. Bitcoin Cash is sitting at $536, Litecoin at around $87, and Dogecoin is tracking sideways at around 15 cents. Not a dramatic day, but very clearly a day of consolidation, and that's usually the calm before the next move. Now, let's get into a proper look at what's been happening, because while prices have been steady, the stories today give us a clearer idea of why the market hasn't done much, and what could shift things over the next 48 to 72 hours. The first major story today is the broader market bounce driven by Bitcoin reclaiming that 90,000 plus position. The interesting part isn't the reclaim itself, but how the market has reacted to it. What we're seeing is a confirmation that buyers are still stepping in whenever Bitcoin dips into the mid-80s. It's not explosive buying, it's not a frenzy, but it's controlled, deliberate accumulation. And that's arguably more bullish than a random spike. Traders across futures markets, particularly on BitMEX and Deribit, have been reducing their leverage and allowing spot buyers to take control. Derivatives analyst Will Clemente made a point this morning that the structural support holding around current levels is much stronger than the headlines suggest. He said, "The absence of panic selling during low liquidity holiday periods shows the strength of underlying demand. If Bitcoin were weak, it would have collapsed this week." That's the first piece of the puzzle for why the market has stopped bleeding. The second major story today comes from institutional sentiment. Some of the same analysts who were panicking last week about further downside have now shifted to a more neutral to positive stance, largely because of the speed at which Bitcoin has rebounded. One of the more respected institutional researchers, Mike McGlone over at Bloomberg, noted earlier that, while the macro tightening cycle is still a headwind, the fact that Bitcoin keeps reclaiming major psychological levels suggests the market has already priced in most macro risk. And this lines up with positioning behavior. We're not seeing the aggressive shorting we saw even 3 weeks ago. Instead, institutions are using this sideways period to reduce risk exposure and wait for fresh catalysts. This is why price action looks boring today. But beneath the surface, there's positioning happening. The next big story, and this one might be the most interesting today, is that whales have been accumulating mid-cap altcoins even while the market has been consolidating. This isn't speculation, this is on-chain data. Kaspa, for example, has been the standout, with over 35 million KS scooped up during the dip. And the reason this matters is because whale accumulation during periods of low volatility usually means two things. Either they know narrative rotation is coming, or they're preparing for a liquidity wave that retail hasn't spotted yet. On-chain analyst Ali Martinez tweeted earlier that, "The last time we saw this pattern, whales buying mid-caps during market consolidation, was right before the Q1 rotation earlier in the year." What makes this even more interesting is that Kaspa isn't the only one seeing increased whale activity. Several smaller L1s and infrastructure tokens have also seen inflows. Not massive inflows, not enough to move the market, but enough to indicate positioning. Whales don't need huge buys to signal intent. They just need to accumulate consistently during quiet periods. And that's exactly what we're seeing. Another story that ties directly into this is the observation that stablecoin liquidity is still very weak. And this explains why we haven't seen a proper breakout yet. Fresh capital hasn't entered the market, at least not in size. USDT and USDC circulation remains flat, and until stablecoin issuance starts to climb, big upside moves will struggle to sustain momentum. Crypto economist Noel Acheson said today that the market won't begin a true breakout phase until stablecoin growth returns. Prices can bounce, but a rally needs fuel, and right now the tank isn't full. That's the perfect way to sum it up. The market isn't bearish, it's just starved of fresh liquidity. And before we get deeper into the stories, this is where we'll take a quick break for our sponsors. Stay with us, because after the break, we're going to get into the biggest story of the day. What analysts are now expecting for December's FOMC implications for crypto, why the next 7 days could be unusually volatile, and what early data is showing for altcoins heading into next week.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Let's get straight into what could shape the rest of this week. One of the underlying drivers of today's flat movement is simple. It's Thanksgiving. Low liquidity, fewer institutional desks active, and reduced trading volume across all major exchanges. This is something we see nearly every year. Crypto goes into a holding pattern for a couple of days, waiting for the full market to return. And because liquidity today is thin, any moves, up or down, are exaggerated. Right now, we're lucky that the exaggerated move is sideways, rather than down. But Thanksgiving isn't the full story. The market is also waiting for clarity on December's macro events, especially the FOMC decision. Traders are positioning around the question of whether the next move from the Fed will be a hold, or whether the path to rate cuts begins in early 2026. The reason this matters so much for crypto is because liquidity cycles are the lifeblood of this market. Whenever the macro backdrop shifts from tightening to easing, crypto usually leads the risk asset pack. And because inflation numbers have been slowly softening, there is a quiet expectation building that the Fed may soften its language next month. That expectation alone is creating this strange stalling pattern we're seeing today. Instead of reacting impulsively, the market is pausing and waiting for direction. Now let's look at another big piece of today's puzzle. The altcoin watch list for next week. This ties back into the whale accumulation story, because some of the early outperformers tend to act as indicators for broader momentum. A few infrastructure and scaling coins have quietly posted green days despite the flat market. Things like Kaspa, Say, and a few smaller roll-up plays. That's not random. Historically, when the majors consolidate and the mid-caps are the only ones showing life, that's usually the early stage of a rotation. It's too early to call it, but we're watching the same pattern that appeared 3 times already this year. And here's something else worth noting. Exchange expansion in regions like the Middle East and North Africa is accelerating. Platforms like Capital.com adding over 1,200 new crypto markets today isn't just a PR headline. It signals that demand in certain regions is growing at a rate Western analysts often overlook. Whenever MENA demand increases, Bitcoin tends to benefit disproportionately, because that region buys more spot Bitcoin relative to riskier assets. This helps create that underlying resilience we're seeing today, even without stablecoin expansion. Another small story, but one that matters for our listeners. Several analysts have said that the current consolidation phase is actually healthy. They're arguing that the market needed a breather after the volatile swings earlier in the week. Craig Earlham from Oanda noted earlier that the absence of forced liquidations today suggests structural strength beneath the surface. And another analyst, Marcus Thielen, commented that if Bitcoin stays above 90,000 through the weekend, that sets the stage for a strong first week of December. As we start wrapping things up today, the key message is simple. This is a foundation building day. Not a breakout, not a crash, a stabilizer. And stabilizer days often precede any significant move in crypto, especially when liquidity is temporarily reduced like it is today. The weekend could be a little unpredictable due to thin trading books, but if Bitcoin holds above the 90K region and Ethereum stays above 3,000, we're in a good position heading into next week. Keep an eye on stablecoin flows. They're going to be the best early warning sign of any bigger shift. And definitely keep an eye on those altcoins with quiet whale accumulation. They tend to be the early sparks before retail wakes up to a rotation. We'll be back again tomorrow with more market movement and hopefully a clearer direction emerging after today's flat session. And as always, we will see you at the top.